Three stocks with beaten down valuations are getting a bit of a lift this morning after a mention in Barron's magazine. Here to talk with me about that, stock writer Ben Levison. Hi, Ben.
Hey, Jack. How's everything?
Good, thanks. Let's start with Hewlett-Packard Enterprise. Split off here. The PC and printer business went one way. The corporate services business went the other. And this is the one that's still run by Meg Whitman here.
That's right.
And what's to like about Hewlett-Packard Enterprise?
There's actually going to be a lot of growth here once this company finishes shrinking. I mean, it's been spinning off a ton of pieces, and it's gotten much smaller. I think the revenue is going to be half of what it was at the time of the split off.
It sounds like a bad thing, but shareholders are getting paid while this company is selling things here and moving things there. There are cash payments, and they keep a share in these other businesses that are being run in other places, so shareholders are doing okay.
Right, and there's still growth here. They're making some small acquisitions to try to boost the businesses that they are staying in, which is basically servers for the cloud and all that. And if that growth comes in, and the stock is so cheap, I mean, it's been running for a while, and it can probably run some more. 11
times earnings, while the broad market is around 18 times earnings. So that's the price you should be trading at if you're dead, and here's a company where there's still some growth.
That's right.
Okay, let's move on to CalAtlantic Group, the product of a merger between home builders. This is now the fourth largest. Maybe people aren't familiar with the name, but it's the fourth largest home builder, California-based, focused out west. I should mention, by the way, Hewlett-Packard Enterprises is up just under 3%, and this one, CalAtlantic Group, is also up close to 3%. What do we like here?
And basically, this is a company that is big, has a great footprint on the West Coast in California and in the Southwest. These are fast-growing markets. It messed up a little bit the last time it reported its financials. Home growth was a lot slower than it was supposed to be, but those were really almost like unforced errors. They couldn't get enough workers. They were charging, the prices were a little too high. And these are things that could be corrected. And the stock is, again, dirt cheap. You compare it to other home builders, and it trades at really a fraction of the multiple. And so if they can grow the way that they should in these fast-growing markets, then the stock has a lot of upside from here.
Not too long ago in this industry, we were talking about way too much inventory. I recently had a conversation with someone, not from this company, someone else, and it was just pointing out, look, sales are taking off. The builders aren't building enough. There's not enough inventory going forward. We're going to need a lot more. It sounds like the builders could do well. By the way, this one is somewhere around 8 or 9 times earnings. It's the fourth largest, like I said, but it's the cheapest of the bunch easily.
And it also is tapping into both a high-end market, but it's also catering to millennials, which is a very fast-growing market. And so it really has potential there if any of this goes well.
That merger gave them something at the entry level and something on the high end, so there's not really a lot of overlap there financially. Let's move on to a company so tiny, PICO Holdings. Okay, the ticker here is PICO. This was up 10% earlier this morning. Last I checked, it's up about 8%. Small company. They've got a building operation, a home building operation, but really, this is all about one asset on their books. What are we talking about here?
We're talking about water. They have water rights in Nevada, and there's been this bet that at some point these water rights will be worth a lot. So far, that hasn't happened. But the article notes that there are a number of businesses that are moving in, like Tesla doing its gigafactory there, and at some point, these assets should be worth more, and they will go up. The company trades at about, I think it was $10.
$10 and change, yeah.
And it could be worth about 14, and that's even if you value a lot of these assets at kind of depressed prices.
That's the book value, 14 and change. Right. And David Englander, who's the writer here, says the book value might even be a little more conservative.
That's right.
Those jobs that are coming in, they bring workers. Workers need houses. Home builders need water, and that gives this company an opportunity to turn this asset that's sitting on its books into cash at some point going forward, and that could give the shares a lift.
The headline calls it gold. So who would argue?
We will see. Thanks, Ben.
Thank you.
And thanks for watching.